Hi everyone, this is CA Hardik Thakkar, and in this video we are going to understand the basic principles of heads of income. Okay, so each head of income I will be discussing for about 5-7 minutes just to give you the introduction, and of course the practical part we study it in the class and we will cover it in the detailed videos. But the idea of this videos is going to be making you aware about the basic principles of a heads of income and to give you the bird's eye view. Okay, having clarified this, let us understand what are the different types of income. Okay, if you have watched the previous video, I had mentioned it, I will mention it one more time. There are total 5 heads of income classified under Income Tax Act 1961. First is income from salaries, second income from house property, third income from capital gain, fourth income from business and profession, and last is income from other sources. Okay, so these are the 5 broad categories of income. So any income that any person or any SSC can earn can be classified in either of the head of income. Okay, so no matter how smart you are in earning a unique kind of an income, or no matter what name you give to your income, it will be by default classified under any of the head of income and you will be taxed on that income. Okay, the only income of your which will not be taxed is the income that government specifically tells you that we don't want tax on that income. So unless your income is specifically exempted or put in a non-taxable category, by default any income that you earn will be classified under any of the head and you will be taxed on that. Okay, so let me give you a quick introduction about the first head of income, which is income from salaries. Okay, now you might think that it is very obvious what is there to understand, but there are few points that you need to understand to make sure that you know the charging section of the income from salary. When can a income of a person be taxed at income from salaries? Requirement number 1, okay, your income should be received from an employer. That means the person from whom you are receiving your income is your employer. There has to be an employer-employee relationship that has to exist for income to be taxed as income from salaries. Okay, if let's say I am a content creator and I create content on social media and I collaborate with brands and the brands pay me money for doing their Instagram promotion. Now I receive money from them for making social media content. So is the money that I receive from that brand my salary income? Absolutely not. It is not my salary income because the brand that I am collaborating with is not my employer. I am a freelancer and I am doing work on a professional basis. That means there is no employer-employee relationship. It is a client and vendor or a service provider relationship. Okay, in that case it will not be income from salary. If there is an employer-employee relationship that exists, then it is an income from salary. Condition number 2 is you should have received amount as the ordinary course of the business. Okay, whatever is covered under your scope of employment, if you do that, if you give that service and in exchange of that if you receive your salary income, it will be taxed as income from salary. But sometimes it happens that even if there is an employer-employee relationship, sometimes employee might provide some service which is beyond his scope of employment and to his employer only. Okay, and in exchange of that, if that person receives consideration, it will be considered as income from professional sources or income from other sources and not as a salary income. Okay, I'll give you my example. I am a chartered accountant by profession and I am employed with Nagindas Khandwala College. Now, my employment with Nagindas Khandwala College requires me to take lectures, set question papers, assess the papers, take internal exams and all those things. That is covered in my scope of employment. Okay, however, being a practicing chartered accountant, college told me that if we want to do internal audit of our college, can you do that for us? I said yes, absolutely, it would be my pleasure. Right? But college told me that we don't want to do it for free. Since we are taking your professional service, we would like to pay something to you. Okay, and we arrived at a consensus that they will pay me 50,000 rupees for undertaking internal audit assignment of the college. Okay, so I provided internal audit services and in exchange of that I received 50,000 rupees from my college. Okay, In this case, I have received money from my employer, but that is not sufficient. Have I received this 50,000 rupees in my ordinary course of employment? The answer is no. I have received money over and above what I was required to do and for providing some extra services that was not covered within my scope of employment. Again, that will be a professional income and it will not come under income from salary. So two things to remember, okay? There has to be an employer-employee relationship for you to be considering that income as your salary. And second, the amount that you are receiving, that an SSC is receiving, should be in the ordinary course of the employment. Okay, so these are the two basic conditions for income from salaries. Okay, now a quick couple of things. Point number one, let's say in a particular previous year, I received salary only for 10 months and not of 12 months. Okay, 2 months salary is in arrears and college told me that we are facing some cash crunch, so 2 months salary we will pay it to you in next year. So this year I received salary only for 10 months and 2 months salary is in arrears, which college tells me that they will pay me after 2 months. So in that particular year, I will have to pay tax on how much salary? Do I have to pay tax on salary income of 10 months or 12 months? That is the question. Okay, a lot of you watching this video might feel that we should be paying tax only on the salary of 10 months. But unfortunately, that is not the case. I will have to pay salary for entire salary of 12 months. Because salary is taxable even if the salary is due and not yet received. It is taxed on accrual basis. Okay, it is taxed on accrual basis. If I have earned the salary and not yet received it, that is okay. I will have to pay tax on that. Okay. Question number 2. Let's say I have some social obligation or some social function that is coming up. Let's say it is my sister's wedding in the next few months. So I approach my college and I tell them that I want 3 months salary in advance because there are a lot of expenses that I have to incur for my sister's wedding, for which I need extra money. So would you be generous enough to lend me that advance? College says that yes, they would be able to do that, and they paid me 3 months salary in advance. Okay, so in 12 months duration, I received a salary of 15 months. How much tax will I pay? Will I pay tax on 10 months salary or 15 months salary? Again, I will be paying tax on 15 months salary because income tax says that even if I receive salary in advance, I will have to pay tax on that. So salary is taxed on accrual or on receipt basis, whichever is earlier. These are few things that you had to understand about the basic provision of salary, and further points will be covered in the upcoming videos. So stay tuned and thank you so much for your time and attention.